And so those indices on hedge funds, private investments, things along those lines, you have to take it with a big grain of salt, and they tend to be overstated from what the actual returns were for that asset class or for those groups of investments.
Welcome to Retire Smarter with Kevin Kroski. Find answers to your toughest questions and get educated about the financial world. It's time to retire smarter.
Buckle up. It's another episode of Retire Smarter. Walter Storholt here alongside Kevin Kroski, President, Wealth Advisor at True Wealth Design in the greater Pittsburgh area, Southwest Florida, and the home base of Northeast Ohio, but really serving clients all across the country now, especially with the podcast. A lot of people who have reached out to Kevin over the last couple of years come from all over, and you're always welcome to reach out. If you have any questions, good way to do it is to go to truewealthdesign.com and look for the Are We Right For You button to schedule a call with the True Wealth team. Kevin, great to be with you today. You sounded a little perturbed, though, before we hit the record button today.
I am, but before, let me start off on a positive note.
All right, start positive, then we can go crazy after that. Okay.
I wanted to give a shout out to Tyler Emmerich. So Tyler was, he and I did a podcast episode with your help a couple months ago, Walter, and he's been with us, and he's an incredibly good advisor, just a good human being. But I said on the podcast that he was taking his CFA, his Chartered Financial Analyst Level 3 exam. And I kind of put him on some accountability. Several clients have said, like, hey, did you pass the test? Did you pass the test? And his response was he hadn't gotten the results yet, which was true. But we are happy to report, probably Tyler's even happier than I am, that he has indeed passed CFA Level 3.
Right.
And each of these are, I mean, they're really, it's like a 40% passing rate for each level.
Oh, wow.
I know a lot of smart people that have tried to pass and become a CFA and have flamed out through the process. And Tyler has made it. And I'm not exactly sure how many kind of dual CFAs and CFPs there are out there. A few years ago, I remember reading something. There was about 1,100 in the entire country. I'm sure there's probably a lot more today, but I would speculate it's still below 10,000. And he is one of them. So he is in definitely some rarefied air. And I'm incredibly proud of him and glad that he was able to do that. And I guess somewhat related, we have,
that was episode 68, by the way, if anybody wants to go listen to the episode where Tyler joined us on the show and get to know him a little bit more.
Yeah, thank you for that. And we have another advisor who joined us a few months ago now. I think we're about 4 months into our relationship. Also incredibly smart. He's also a CFA, and Aaron Sile is his name, and he's been, incredibly valuable. I had high expectations for him coming in, and he's exceeded those. And so we have a pretty good growing brain trust here that I'm very proud of. So it's just definitely, it's not just me, but it takes a village, right? And we have a nice growing village here. So, kudos to Tyler. Welcome to Aaron, and really happy to have them. So I guess now that the positive
feel good's out of the way, go for it.
So, yes, Walter just asked me how things were going and how Florida was, and I had explained that we're not in Florida, so we're in Ohio. And so quick aside, last year through COVID, we stayed in Florida, my family and I, through the whole year. Certainly we felt fortunate that we have these choices and that we do have these two homes. Certainly worked hard to get them, but we feel very fortunate and that we have that flexibility in our decision making. Well, if you've turned on the news, you've kind of seen how prevalent COVID is throughout Florida, and particularly the Naples area that we're in. And so we stayed put in Ohio, and we feel relatively safe here. But then, unfortunately, we have a second grader who's soon to be 8, and obviously can't get vaccinated just yet. And so her first day of school was yesterday, Walter. I'm very happy to report that she came home and just had a fantastic first day. Mom and dad had a little bit of trepidation because the school board ruled a few days ago that they weren't going to require masks. And we were, hey, everything we talk about here is like science-based, and it should be no surprise that I'm a vaccine supporter because that's where the science is. But anyway, there was 18 out of 22 kids in her second grade class that wore masks. talked to some other parents where that wasn't the case, particularly for their older kids. But anyway, our daughter had a good first day. So we're staying put in Ohio for a while. But I've been kind of self-professed apolitical, and I can't stand it, quite frankly, a lot of times. But I feel like we've kind of been being pulled into a lot of this BS because a lot of the choices that other people are making are affecting us and our daughter. So what I wanted to talk about today, let's see how we do this, because I'm sure I'm going to piss some people off, and I'm okay with that. I'll say it right now. But I'm going to talk about math and some of the bad math and bad kind of comparisons that I've seen on the media. I tend to very rarely on social media, but I had a little bit of an engagement recently, and I just see a lot of bad thinking, quite candidly. So I'm going to come at this from a pure mathematical perspective. And I'm not going to go ahead and rail on, vaccines or whatever. I mean, I think most people pretty much made up their mind by this point. But I'm just going to use some recent examples that I've seen in the media that are probably using bad math or bad thinking, bad comparisons. And then I will try to relate that same sort of issue to an investing equivalent and maybe even a vaccine equivalent, if you will.
So let's wrap it all together and just lean into it. We're going to cultivate a culture of positivity on today's show. Good discussion. It's okay to disagree with one another or with someone who's listening to the show. You don't have to turn it off or tune out. Let's engage. Let's have a debate. Let it be healthy, and let's wrap all this together. I like the idea. And hey, we can all rally around bashing the media, right? Like all sides, all sides can get on board with that. So we'll use that as our galvanizing point, and then we can have some differences on the other elements. But I think we can all rally around that at least.
Yes, no, I like, and yeah, for sure. I mean, if we could have a little bit more understanding, ability to see the other side, it doesn't have to be a win or lose, but it seems like we have a very polarizing, quick to escalate sort of world today. Probably, I think definitely fostered by social media. I mean, it's just a whole other ballgame with social media these days. But anyway, let's come back to it. So first one, I'm just going to start it's just too good to pass up, and it's too sad and too funny all at the same time. But I don't know if certainly, Walter, you remember when Michael Bloomberg was running in his presidential campaign, and people were talking about how much money he was spending. And I don't know if you happen to recall kind of the Brian Williams gaffe about that.
It feels like 45 years ago that happened, but what was the Brian Williams thing?
So Brian Williams, and it was someone from the New York Times editorial board, were commenting, and somebody tweeted that Bloomberg spent $500 million on ads. The U.S. population is 327 million. He could have given each American $1 million and still have money left over.
Oh, right. Yes. Yeah. Okay. That rings a bell now. Yes.
And both of them, Brian Williams and this, New York Times editorial board member, were like, were just, marveled at it. Like, yes, they could have. I mean, oh my gosh, what they could have done with that money. And hopefully, you're doing the math and moving the decimal point and see that it's a little bit more than a dollar per person.
Yes.
When you do it right.
Life-changing dollars.
Life-changing $1.53. So math matters. That's just bad math. That's nothing, too profound. And I don't have the relations to investing or to vaccines there. But bad comparisons. So I was watching, I can't remember what it was. It was the Sunday TV was on in the background. I was kind of on breakfast number 2, which is a daily occurrence for me. And, having some coffee, and the kids were kind of on their iPads, and we were figuring out what we were going to do for the day. And I heard...
Wait, breakfast number 2? This is a thing? This sounds like an amazing
world.
It is
in my world. It's in my world. Breakfast number 2, yes.
I'm sorry, I just couldn't let that slide by. That was interesting.
Yeah, it's almost every day, but yes. Okay. Moving right along, they made a comment. It was really a story, and they're trying to make a point about, the severe decline of black farmers today versus 1910. Now, I'm hoping when I say that anybody is thinking like verse 1910, like, well, of course, a lot of more people were farming back in 1910. I mean, you don't have to do any research to really figure that one out. But I was just laughing because it was like this whole big story. And, I'm not saying anything about the plight of black farmers or not. I'm just saying the comparison was terrible. Just like the math for Brian Williams was terrible. And it's terrible for 2 reasons, among others, probably. But there's some cherry picking there as I dug into it. And then there was also selection bias. So I did just a quick search. I was like, well, why 1910? And I did a search in Wikipedia. I kind of had the history of agriculture in there. And apparently farming reached a peak in terms of, the number of farms and the number of people on farms in 1910. So here you're picking something from the very tippity top. And I think back then they said about 40% of the U.S. population lived on farms. Walter, do 40% of the U.S. population live on farms today, you think?
I'm going to go with an educated guess of no.
I would say so too. So the populations of 1910 versus today are very different. So you have this problem of cherry picking where you're going back to 1910 at the tippity top. And then, in hindsight, we know it's the top, but, they could have chosen, say, 20 years ago or 30 years ago or something like that. No, they went back to the tippity top to make sure that they made their point and kind of made it unobjectively, in my view. But those populations are very, very different today. You can't really compare the population of the U.S. in 1910 versus today in that way with any meaningful conclusion. Now, the investing equivalent, and I've seen this so many times over the years, and it's BS. It's one of my pet peeves, but you'll see, I call it deceptive investment performance advertising. So basically they are cherry picking data. Sometimes they're cherry picking a certain time period, as in the case of 1910, or they could cherry pick a smaller sliver of data. Sometimes you'll see this with these indexed annuities and their crediting methods, and they'll look at, hey, the S&P 500 did this, and with this crediting method, you have gotten, this really high return. But it's really, in my view, it's kind of data mining and doesn't really give a good indication of what you can expect going forward. And also because of this population difference, there tends to be like a selection bias, is what I would call it. So two examples of that under this investing equivalent and looking at different populations. So let's say that we're looking to pick a fund that we want to invest in a certain category, and we go to Morningstar, which is kind of really well known for doing this. And let's say that 5 years ago this category had 100 funds in it, but today we look and there's only 50. There's only 50 remaining. And typically that happens. That happens quite a bit, and a lot more than what people know and understand. But these funds that just disappear, they tend to be liquidated or merged into another fund that has a better track record within the fund family, and these go away or they die due to poor performance. If you're a mutual fund company, you want to be able to say 80% of our funds beat their 5-year Lipper average. How was that for a radio voice, Walter?
That was poor.
Good thing I'm a financial advisor, I guess. It was
said very sarcastically.
All right, I'll leave that up to you going forward.
Actually, I guess in today's world, you'd be fine then. Go ahead, have plenty of bias in your reporting. Yeah, go for it.
So if you're comparing a fund, you just don't want to look the ones that survived. You want to correct for that survivorship bias, and you want to go ahead and compare to the entire category, all 100 that were at the beginning of the period. So the population of those funds has changed a lot over the 5 years, 100 down to 50, not too dissimilar from what I discussed with, the change in the population of farming in the U.S. 1910 versus today. Another example that it comes up from time to time, but you'll see people talking about like hedge funds or maybe some private investments or something like that. All these mutual funds through Morningstar, they have to report their returns. It's public information. They're very consumer friendly. Hedge funds and some other private investments, they don't have that obligation. Instead of being required to report, they self-report. So whenever you have any sort of self-reporting like that, there's an inherent bias. If your returns are good, you're going to report them. If your returns are not good, you're not going to report them. And it also doesn't correct for that same sort of survivorship bias where the hedge funds or the private investments that blow up don't make it into the index. And so those indices on hedge funds, private investments, things along those lines, you have to take it with a big grain of salt. And they tend to be overstated from what the actual returns were for that asset class or for those groups of investments. So now here we go into the vaccine equivalency. Okay. So we talked about populations. We talked about cherry picking. There's all kinds of that's going on. I made a comment. Candidly, I was probably venting a little bit on Facebook because I have some family members that I didn't want to vent to, and I was liking certain articles, and it made me feel good. And I'm not going to do that anymore. But one of the ones that I did, I got a response from an advisor who's a friendly competitor down the road. And I won't go into all the details, but you may have heard this, Walter, for the vaccines. There was an outbreak in Cape Cod, and 74% of the people that had COVID were vaccinated. You heard that?
Yes, I remember that. That was big news a couple weeks ago.
You got it. So he responded with this, and I read the article, and I'm like, oh, okay, I hadn't heard this. Let me check this out. And it said nothing about the underlying population in Massachusetts. And so similar issue. You hear when you dug in, you saw a very high percentage of the population of the people in Cape Cod were vaccinated. It was literally like mid 90s or something from a couple of the sources that I saw. So the population is very different in Cape Cod, where 95% of the people are fully vaccinated based on what I saw versus the US in general. The last stats that I saw was, I think 70% of the people had at least one shot, and then about 50%, I think we just crossed over 50% not too long ago as we record this at the end of August, were fully vaccinated in the US. So the populations between Cape Cod and the US in general, very, very different relative to the number that were vaccinated or not. The other thing that goes along with this, I would say, so let me make sure that I make this very clear, but if there's a lot more vaccinated people, in this case, 95% of the people are vaccinated, and only a handful of the percentage of the people are not vaccinated, it's much more likely that you're going to see more vaccinated people end up in the hospital or have a breakout and get COVID from it. It's just basic math and statistics. The other issue here was it was a pretty small sample size. It was a couple hundred people. If you look more broadly, if you look at the US data, I mean, it's just very clear who's getting sick here. I mean, you find like one small little outlier, and then you dig deep and say, okay, well, hey, I mean, the populations aren't even comparable, and it's a really small sample size. This is just some, cherry picking and selection bias. Does that make sense, Walter?
It does, absolutely. Yeah. And that's also what then grabs the headlines, though, because it's just not sexy to say 99.9% of people vaccinated aren't ending up in the hospital, but this one spot had all these people end up in the hospital. And it's the whole could it happen here thing, right? Like, it happened there tonight at 11. Could it happen here? It's that same mentality that's what draws the eyeballs and the brain. And
I get it. I mean, it's something that, it's something worthwhile to look into, but it's just a bad comparison. It's, as I've explained a couple times over. I mean, if you want to look a little bit more broadly, if you go over into the UK, what over there, let's see, 2/3 of the population were vaccinated, but 1/3 of the people were getting hospitalized were vaccinated. But if you look at it again, more of their population is fully vaccinated, same sort of issue that you have in Cape Cod. But you do have a larger sample size there, but you still have the case that the vaccines are not only working, but they're precluding people from getting hospitalized at as high of a rate that they would if they had not gotten vaccinated. I mean, it's just basic math. I mean, it's very cool that people are getting into data. I mean, for me personally, I like data. We talk about a lot of data here on the podcast. Everybody is now a data expert when it comes to COVID, the era of COVID. But you see these bad comparisons, whether it's from the media or thinking, and then, without really kind of understanding what goes into it. So, you just got to be really careful not to draw faulty conclusions when comparing different samples or sample sizes. And you don't want to cherry pick the data. At least you shouldn't want to cherry pick the data. If you do, then you are maybe intentionally trying to mislead somebody. At least you're informed, but you're intentionally misleading. I'll just give one other example, but you've probably heard this one, Walter, where correlation does not equal causation.
Causation, yeah.
So, when I was in grad school, I took several stats classes, and kind of the classic example of this, and I had to do this in grad school too, was basically you go through this data, and then you show that ice cream consumption is highly correlated with increases in the murder rate. So ice cream, sales, increasing ice cream sales, are presumably turning people into a killer.
Right.
Right. So absurd, right?
Absurd.
It's, maybe if they're out of your favorite flavor, I'm not sure. But just doesn't make sense. So, who knows? Some reasons could be, ice cream tends to be sold more so in the summer months. People are more so out and active in the summer months than, maybe when there's a foot of snow on the ground. We don't know definitively, but just because they're correlated does not mean that there's a causal relationship there. I'll give you an investing equivalent, and we had to do this one too when I was in grad school. So it was a couple decades ago, a couple academics showed this, that there was a very high correlation between the annual level of the S&P 500 and the annual production of butter in Bangladesh.
Wow. Butter
Yes.
in Bangladesh.
Butter, and it has a nice ring to it. And I don't know about you, Walter, but I'm a big fan of butter. We have the Mo Butter, Mo Better saying in the Krosky household.
Okay, nice.
And hey, I mean, it's congruent with my job too. I mean, it makes the S&P 500 grow. So I guess
Invest in
Win-win.
Bangladeshi butter.
So the correlation over the period that they analyzed from 81 through 93 was about 87%. And correlation, again, it just means how related are two variables. Perfect positive correlation is 1 or 100%. And then, perfect negative correlation is -1 or -100%. So, just because
kind of reminds me of the election stuff, right? We're about a year out from when that was going on. Didn't we have some discussions about whenever there's an election, the market does this, or when a Republican occupies the White House, it was something about the markets predict the election or elections predict the market, and there was some of that correlation, causation kind of conversation around a lot of that. I remember some news stories kind of coming out about that kind of thing.
There's so if you talk to people that actually do the research, sometimes you'll hear the phrase torture the data to find statistical links. So, you can look at things and say, well, there's a saying like, hey, you sell in May and you go away. And that's kind of the investing strategy. Just because there's a past pattern in the data doesn't mean that it's a good reason. As it relates to investing anyway, you ideally you want to have a good economic reasoning linked to statistical evidence. And so you're trying to find more of a causal relationship and not just, some data, but something that is theoretical and then supported by the evidence. And this may sound kind of wonky, but I can tell you, I've looked at so many investments or new investment strategies over the years, or even just trying to understand historically what has worked. And if you don't understand these little nuance, and it may sound like a little nuance, I mean, to me, it's become more commonplace because this is what I do and what I've done for many, many years. But, like the other financial advisor that I mentioned that, gave the 74% Cape Cod story, I'm like, dude, you guys manage $500 million for your clients. You better understand this, because if you're making investment decisions with that same kind of thinking, I feel sorry for your clients. Maybe that's me venting again, but maybe I shouldn't do that. But the point being, I mean, this stuff is important.
I'll allow it, Kevin. Go ahead.
All right, thank you. So, and here's kind of I'll close the loop, and I'm sure I have a family member. She probably doesn't listen, but yeah, this would upset her. But so another issue. So I did the issue, and you see this all the time in advertising too. I mean, I was reading a business magazine this morning, and it said companies with PEOs grew 29% faster than companies without PEOs. The PEO is just a professional employee organization. It's a way to, structure and outsource some of your benefits and HR needs and things like that. But it goes back to that same thing. It's a correlation thing. It says there's no causal relationship there. And I doubt that if you dug into the data that you could find one. But maybe it makes a good headline for the ad and for the PEO that was trying to support it and sell it. Something else that's been pretty prevalent over the last, I don't know, a couple of decades, back to the vaccines and, this whole thing with, autism and the increase in autism and how it was supposedly linked to giving the MMR vaccine, which has been thoroughly debunked. I'm not going to get into that. I'm sure I'm, offending a lot of people right now. Sorry, I believe in math. And just because there's a correlation there, it's just like the ice cream and the murder rate. It's been proven now, if you can understand the math, that there is no causal relationship there. They've actually shown that autism can onset and does like 6 to 12 months old, even before the MMR is being administered and some other things. So just because, so that's, I guess, maybe my final, take the media or take some advertising, show the issue related to investing, close the loop with vaccines. So Walter, I didn't prepare too much for this one, just like the last one, but it's been a lot on my mind. So hopefully I'm making a coherent argument here.
I didn't prepare with my 18 examples that I have ready to go to illustrate my points today, but I didn't prepare.
I didn't prepare to the level that I normally prepare.
Well, I've got a few for you. So
please.
And it's just because, like, so you can take it as, okay, we just have to dig further into the numbers, but it gets even tougher when you realize that people are purposefully then manipulating these things, and it can happen very subtly. And so there was one example I remember reading about just a couple of months ago where it was reported something like less than 10% of transmission happens outdoors of COVID-19. And so you might hear that and go, like, it was almost written in a positive way of like, okay, less than 10% of transmission. But the 10% still sounds pretty high. And I think that's where our brains go, like, oh, it must be 9 point something, right? And, oh, that sounds a lot higher than maybe I would have thought. Well, in reality, it's actually less than 1% and may even, according to some reports, be less than 0.1% of transmission happens outdoors. But yet the way it was reported and portrayed was less than 10%. So that'd be like saying there were less than 20,000 shark attacks each year in the United States. And it's like, oh, does that mean there's 19,000? It just leaves way, and it's just a small manipulation or omission perhaps, or just an inaccuracy, whatever the reason behind that big gap. You can just see then how that can change attitudes, minds, and opinions. In a non-COVID example, I run a family football, we call it the Family Football Challenge. And it's just a family pick'em game that I've done in my family. We're in season 11 at this point, and I'm sort of the manager of the game. And it's just a big thing we do with all of our extended family. But back in the early days of the game, we only had about 11 or 12 people involved. Now we're over 20 at this point, but only 10 or 11 people in the family were playing the game. And each week I'd send out what the results were, and, as the season would wear on, I'd always look for ways to keep the people who are at the bottom of the standings still excited and interested in the events. And so, like, I'd make it a big deal when somebody would crack the top 10. So-and-so got off their losing ways this past week and had a really big week and just cracked the top 10. And it makes it sound like it's this really cool big thing. Well, there were only 11 people in the game, so it wasn't that big of an accomplishment. But I can massage those statistics to kind of say whatever I want them to say. I mean, you can look for positives and negatives in almost any statistic. And that's what's just so, like, dangerous in today's world, because then you combine that social media element that you were talking about. These things can get posted, and even if they're completely wrong, the damage is done because everybody sees it, runs with it, makes up their mind with it already, and they may not see the correction. They may not see the fallout from that being wrong. And so then it's just, it's over at that point. That's already sunk into their brains, and we as humans have such a tough time of undoing something we've already made up our mind on. And I feel like that's the trap that we keep falling into here, whether it's, investments, COVID, or some other subject. And that's just the really tough part. You can do this with individual stocks, right? Like, you can go and look at anybody could go play this game. Go pick any stock and look at the chart, and then look at the 1 month view of the chart. And you might say, man, this stock is awesome. Look at that. It's just going up and up and up. And then expand it out to a 3 month view, or the 6, or the year, or even better, the all-time view. And you're like, oh, wait a second, this stock that's $4 that I was like, oh, this thing's gone up from $2. This is fantastic. Used to be $150 back in the day. And now, it crashed for many, many years and has a small resurgence. And just tells a completely different story every time you just widen the view out a little bit. And I feel like we just don't have the capacity sometimes to absorb all of that with these statistics and information that we hear on a daily basis.
Well, I don't know who said it, and I'll paraphrase the quote as I recall it, but what you were just talking about was like these chartists, kind of looking at this chart of some, past pattern or something. I believe it was a Nobel laureate, somebody that, I would have been reading, that I would have been trying to learn from on investing. And he said, chartists are similar to astrologists. However, as I say that, I'm kind of offending the astrologist, implying that the chartists are even worse. It just doesn't really work. I guess is the point there. I guess tangential to this, and I completely agree. There's like this tribalism, it seems. I make up my mind and change my mind. I'm happy to learn from people that are smarter than me. I try to do it all the time. I personally like to listen to, there's something called Intelligence Squared podcast where you'll have a debate of, two educated people on opposing views of a topic. And it's pretty cool because you get to hear these informed people argue their point. They take a poll before the talk is given, and then they take a poll after. And basically the winner of the debate is, the person that sways more of, the population towards their view. And, I enjoy it. I try to, see both sides as best as I can anyway. But yeah, I mean, social media and this tribalism, I mean, it's just, I don't know. To me, I just don't like to participate in it. So I had a bit of a fail on that recently, and I will go ahead and abstain from it moving forward. But I just read a book, or I listened to it. It's called Mine, M-I-N-E exclamation point. Two law professors wrote it, and it's about property rights. I know if you're listening this long, that didn't put you to sleep, but it was actually really good.
I was not expecting that, by the way.
One of the questions, for example, it's all stories, but you get on an airline seat and, you have that recline button. Let's say that you're not on Frontier or one of the discount ones. So who owns this? Who owns it? Do you have the right to recline, or does the person behind you have the right to that space?
Who owns that airspace?
Who owns that 2 or 4 inches or whatever it is? And so it was a really cool story.
Or the armrest, like how do you divvy up the armrest, right?
You got it. And it talks about how these property rights really change over time. And it was fascinating. But there's also, they interjected, there's an economic thinker, I think he's deceased now, Ronald Coase, really smart guy. I've heard a lot of different professors kind of use him in some examples where, you kind of look at, these kind of competing objectives. So like, for my daughter right now, we would prefer that she wears a mask, and we just precludes her from getting sick. I mean, I'm not scared if she gets, COVID, candidly. I know it's a very low probability that something bad is going to happen. I don't want her to get a common cold, let alone COVID. And I don't want her to pass it around to somebody else that is maybe immunocompromised or something like that. I just don't think that that's a responsible thing to do. That's my value. But the people that don't want to wear the mask say, hey, my body's my temple, you can't tell me what to do. Like, well, I mean, I don't know about you, Walter, but last time I tried to sell my kidney, one of my spare kidneys, I wasn't able to sell it. So you draw these lines somewhere in society, and you make these choices. And one of the things that both of those arguments I think are valid. I do see the choice that I don't want to go ahead, and I said this in 2 episodes ago. You kind of preface the whole aligning your values, aligning your investments with your values, and you said Kevin's going to tell us what you should do, and I quickly said I'm not going to shit all over you, and I believe that. So the person that doesn't want their breathing restricted, I think my body's my temple. Valid argument. Can't debate that at all. But also on the other side of it, what I explained with my daughter too, and hey, I want her health protected. This Delta variant particularly is, incredibly contagious. And there's also some other, potential passing on, even to vaccinated people that are immunocompromised or otherwise, and they can get sick. So I think both of those arguments are valid. But the reason why I brought up Coase was he has a framework for kind of working through this, and it's simply, he acknowledges this, and he tries not to go ahead and get into the moral aspect of any of this. But, it's really, if you're trying to optimize the benefits of the resource, or if you're just, if there's maybe not benefits, but you're trying to minimize the costs, and you just want to do it in which way makes most sense and kind of tilt the scale. So while both of those arguments, I see them as valid anyway, I do try to see the other side. I think when you look at it and you kind of, you have this conflict and realizing that both are valid, and you have to tip the scale one way or the other. To me, I mean, it's a no-brainer to go ahead and tip the scale, and let's just wear the mask. One, I want my kids to be in school. I want them learning. Two, if they have an outbreak, they're going to be distance learning and the school's going to be shut down. So I want them to be in school. And, if somebody's immunocompromised, I don't want them to get sick. I was at a fantasy football draft with my college buddies over the weekend. It was good fun. We do it every year. Get to see about 14 buddies of mine that I haven't seen, that we grew up together, and we still stay in touch. And one of us was not vaccinated. And I kind of knew it going in, or at least speculated it. and he was my roommate for a couple of the years. And then there was another friend who was also a roommate in my junior and senior year who has Crohn's disease, and he's immunocompromised. He's vaccinated. But, he's the kind of person, when you bring it down to the person level, rather than just talk about some broad statistics, that could get hurt from somebody like my other roommate not getting vaccinated and passing this around. So both arguments are valid. I'm not saying they're not. I don't want to shit all over anybody, but sometimes you have these tough decisions and you have to make a call. To me, it's a no-brainer to get vaccinated. To me, it's a no-brainer to wear a mask, particularly since my child is under 12 and doesn't have the choice to get vaccinated. But hey, it's my podcast. I guess I can say that, right, Walter?
You have the liberty to say whatever you want, man. That's I suppose maybe one of the apps could potentially kick us off if they didn't like something you said, but for the most part, it's your show.
All right, that's true.
You own your RSS feed.
That's that book. It's actually in that book too, mine. It talks about property rights where possession is like 9/10 of the law in person. But in the digital world, it's kind of the opposite of that. If you download a book on Kindle, you think it's your book, but hey, Amazon may just wipe it clean, and they can do that. So that book, mine, it was really interesting. I mean, I know I'm a bit of a nerd to some regard, but I think with the stories, I think a lot of people can get a lot out of it.
Reviewed by Kevin Kroski, one of the best property law books of all time. Mine. Go check it out today. It sounds like is that how your review would read?
You got it.
Fantastic.
I'm a top 10 million reviewer on Amazon.
There you go. Just remember, that seemed like a little bit of a nod to that, 20,000 shark attack stat. That was pretty good. I'm a top 10 million reviewer. That's fantastic. I will leave you with this. Just remember that 90% of statistics can be made to say whatever you want them to say. That's the final statistic to share on today's show. So
I was going to say that, but mine was going to be 98%.
Well, we just have to look a little bit more into the data. That's the wiggle factor. There's a little wiggle factor in some of those numbers.
Yes. I wish that they taught statistic they do teach it in high school, but you don't have to take it. But yeah, I mean, it's good to understand, and statistics helps you understand. It does, but I don't know. Hopefully this brought some clarity to people that are open to having it.
I think you brought up an important point, too, with the situation at the fantasy football draft and your friends. There's kind of a necessary element to do both of these things, right? Look at the stats, look at the broader view, but also remember the human element, the personal side, and the individual interactions that we have with people. So it's not one or the other. It's not the one anecdote that you've experienced and that shapes your worldview, but it's also not just the broad numbers. I think sometimes you have to kind of look at both of those things, your own real-life experiences and the things you've experienced yourself, and combining that with what's happening in the larger numbers. That might help shape and put things into the right perspective for you in some situations, perhaps. So,
yeah, and back to and good old Ronald Coase, minimizing the cost. So the cost is my daughter, wears a mask, and it's. I don't know about you, but I didn't hear about some big outbreak last school year about all these kids dying off or going to the hospital from wearing masks. Maybe, yeah, sure, it's more comfortable without having it, but that cost versus the other cost of not being in school, not learning, infecting somebody that's immunocompromised, spreading it, you name it. I mean, to me, when I look at this economically from a cost benefit perspective, it just becomes a no-brainer.
Yeah. Well, thank you for sharing your perspective, for being a little opinionated on today's show. That's okay. We can do that every once in a while here, Kevin. I thought we had the conversation in a respectful way, and hopefully nobody's too upset with you on today's show. But I thought it was good content, very interesting to listen to your comparisons between this and then also in the investment world, where we see a lot of these statistical, I don't know if we want to call them anomalies, misinterpretations, errors, bad conclusions, but something in that realm. Interesting to see how those things all play out.
And I'll say this too, Walter, if anybody's still listening, and you happen to see a headline that doesn't make statistical or mathematical sense, or something, it doesn't have to be a headline, even an article. Send it to me. I will. Maybe this could be a future segment that we do, because
that would be fun. Yeah,
no shortage of this that's out there. But I mean, I see it all the time, and with a little bit of help from our listener audience, maybe we can have a little bit of fun with this, and not only just fun, but really educate some people to make some better comparisons and do some better thinking.
The messed up stats segment. We'll have something along
messed
those
up
lines.
math.
Messed up math. There we go. Messy math. I think we've zeroed in on it. Yeah, that sounds great. If you want to send those to us, please do. You can contact us through the website truewealthdesign.com. That's truewealthdesign.com. It's also where you can schedule a 15-minute call with an experienced financial advisor on the True Wealth team. Just click the Are We Right For You button, and you can also call 855-TWD-PLAN. Kevin, thanks for joining us on the show today, taking a little risk, stepping out there, and we'll look forward to chatting with you again on the next episode.
Appreciate it, Walter. Thank you.
All right, for Kevin, I'm Walter. We'll see you next time on Retire Smarter.
Information provided is for informational purposes only and does not constitute investment, tax, or legal advice. Information is obtained from sources that are deemed to be reliable, but their accurateness and completeness cannot be guaranteed. All performance reference is historical and not an indication of future results. Benchmark indices are hypothetical and do not include any investment fees.